In this episode, we'll be discussing the state of AI and machine learning in the insurance industry. Welcome to the Productive AI podcast, where we aim to simplify AI and make it more accessible to business and technical leaders. I'm your host, Troy Angradon. If you're interested in how a conservative industry like insurance can make use of AI and machine learning, you're in the right spot. I'm meeting today with Colin Toal, CTO of Chisel.ai, and we're going to have a pretty interesting conversation about how a fairly conservative, or I would say very conservative industry is tackling bringing AI and machine learning in to improve its operations and help its customers and just generally bring it forward into the future. So Colin, I want to say thanks for making time today and welcome to the show.
And thank you, Troy, for the opportunity to have a chat with you today. I'm happy to be here.
Absolutely. Really appreciate it. I've been looking forward to this one. So I think what would help maybe is if we could start at the beginning and if you could give us just kind of a big picture overview of the space. Who are the players? What do they do? How do they interact? And then I think maybe when we talked last, we talked about the kind of what's happening in there, the disruption of the status quo. So maybe we could start there.
The kind of insurance that we specialize in at Chisel is a little more complicated than the personal lines. This is commercial insurance. These are the kinds of risks that are unique to businesses. If you think about an ice cream truck business as an example, they'll need that same automotive style insurance, but they'll need it in a commercial context. Those trucks are on the road a lot more often. They're in a lot different kind of traffic than you might be with your commuter vehicle. They also have product liability. If somebody gets sick because of the ice cream, they have to make sure that that person can be made well again, can be made whole after that adverse event. So they have to carry some liability insurance for the product. They also have to carry just general liability insurance. This is the kind of insurance that protects them from slip and fall or any kind of regular operating risk that they might have as a business. So the commercial lines insurance it's a bit different than personal lines. It's a lot more complex. It's a lot more specific to the nature of the business. It's not as commodity as you will see in personal lines. It's also not as controlled by regulation. Now, there are some notable exceptions, things like workers' compensation or even commercial auto, where there is strong regulation that helps define the product. But in most of the other kinds of commercial risks that insurance companies write against, it's much more complicated. Generally, because of how complicated commercial insurance is, and to a certain extent also the personal lines, it's made as what's known as a placement market. This might be a term that's not readily familiar to all of your viewers. Placement markets are markets that are made by brokerages that sit between the person buying the product and the person selling the product. And the reason placement markets exist is because the needs the product serves is complicated and the purchaser may not even fully understand them. So we take our ice cream truck example again. You might make great ice cream, but you may not specialize in all of the risks that's involved in selling that ice cream from a truck. Your broker will help you understand the size of coverage you need, the amounts you should pay for that coverage, and all the different types that you need. They function as a risk managing advisor for you. And they get a lot of information about your business and they get to understand where your risks are so they can make a good recommendation to you about the kind of commercial insurance you should carry. On the other side of that relationship, they take that information to the carriers that actually underwrite that risk. So they're these large financial insurance or financial institutions. They're very, very big companies like AIG and Chubb, and they're responsible for collecting the premium and making sure that in the event that there's an adverse event that occurs, paying out the claim. Okay, they largely function by making profit off of the reserve fund. So they collect the premium in, they keep it for a period of time until there is a claim that occurs, and they get to make a little bit of interest off of that float. So those large institutions, they're very profitable, they're very successful because they understand how much the risk should cost. They do a great job of keeping custody of the premium money to make sure that they can, pay those claims when they occur. And then they also invest it wisely and they make a decent amount of interest from carrying that float. So inside of the overall marketplace, you really think about three players. There's the company that needs the ability to persevere in the face of risk. They need the ability to succeed and do their business, even when things might go wrong. You have the broker that specializes in understanding those risks and helping them size them and know how much they should pay for them. And then you have the carriers that are responsible for actually providing the coverage for those risks, for helping to price those risks and helping to pay the claims in the event that there's something unfortunate that happens. As a facility, it's incredibly important for people. We really wouldn't do anything big in this world if we understood the risks. You know, I'm reminded of a movie from years ago with Ben Stiller, where he played an insurance underwriter, and he was so fixated on the risks in his life that he basically couldn't function. The reality with business is that things would be so difficult if we had to mitigate every risk directly and aggressively. So the perseverance that insurance gives us, the ability to function in the face of that risk, is super, super important. It's a big, important industry. But it's, like you said, it's also a very robust and old industry. It's been around for centuries. The interesting thing that can happen for us now is how we can help modernize it, how we can help accelerate it, and the speed up that can occur in that placement process.
When I was doing the research for this discussion and talking to you beforehand, I was looking up some of the history of it, and it's crazy, but insurance is roughly considered to be 5,000 years old, and modern day insurance is considered to be 400 years old, somewhere in the 1600s. It's a pretty interesting industry, actually. So now what's happening? So let's kind of talk about your macro environment, because you've got these kind of disruptors coming into your space. And I think that would be interesting to talk about before we sort of go down the AI ML track. Could you talk about that? You know, Tesla, Walmart, all these sort of external, non-traditional players coming to the space. What does that mean? And what is the impact on what you're doing?
Yeah, it's interesting to think about the rate of change of technology and how well insurance as an industry is adjusting to that. The most prescient examples that come to mind, you know, you mentioned Tesla, and particularly the self-driving capabilities. What's most interesting for people with Tesla? The dilemma that self-driving presents is really about vehicle ownership and really about where the risk lies with respect to operations when the car is operating itself. If you don't need to operate it, are you really liable for the risk that its operations present? And what does that mean for Tesla as a company? What does that mean for automobile insurance as an entity? And it's not just limited to the personal use vehicles. Tesla and others are developing long-haul freight trucks that are fully autonomous. And in that case, they've got to make sure that they're covered not just for the liability of the operation with respect to risk to other motorists on the road, but guaranteeing that the freight arrives when it's supposed to, that it arrives undamaged. All of that represents a different sort of perspective on who carries the risk with respect to those operations. There's other cases where you're seeing, you know, Walmart emerge a bit as a channel for consumer protection and personal lines insurance, where they're selling not just direct to consumer, but they're also selling warranties and product insurance that is about reliability and guarantee. And they're selling that at the point of sale. So the kind of underwriting that occurs there is a little bit different than what we see commercially. For us, the interesting thing that emerges, there's probably one more example that's super relevant, particularly for our world. The risk that emerges around these new kinds of models and how the insurance industry is able to adapt to them quickly enough to capture value and then to sort of outcompete competitors is, I think about Uber and the risk of rideshare, especially with commercial liability for fare driving. Mm-hmm. In that case, there's actually a gap in the market. It's an interesting one. There's some carriers like Aviva and others that are stepping into that gap and providing hybrid insurance that is personal when you're using your vehicle for your personal use, and then actually switches into commercial coverage in the for fare sense. The ability to do that well, to do that underwriting well, and to be able to process the claim effectively and understand when the vehicle is being used for fare versus when the vehicle is being used personally is essentially a data problem. And these insurers, they're adjusting quickly to these changes in the market. They're adjusting quickly to the kinds of disruptions that self-driving, that ride sharing, that fractional occupancy inside of people's homes with Airbnb. They're adjusting to those things. There's a number of different companies that are operating like carriers or MGAs in that space to help. For us, what we're learning from that is that the data that can inform you and help you with the placement of that risk as well as the underwriting of that risk is essentially really important. And in the commercial context today, a lot of that data is locked in paper. It's not in digital gateways. It's not in portals that natively structure the information for computers to process it. It's actually in paper. And part of that is really, really powerful. The ability to negotiate the specifics of coverage and the specifics of risk, it's most flexibly dealt with in language. It's most easily understood by people in language, and it's most accessible to the claims process and claims adjudication when it's in language that's precise and clear and that people have read and understood. When it's locked in web forms or it's the function of an API call, it's not really clear the agreement or the nature of the agreement that occurs. So for us at Chisel, we've realized that that function of those documents, the function of that paper, is extremely, extremely important to the industry. And it's the preferred way of getting clarity on the nature of the product. So what we have added in is the ability to process that paper with natural language processing, with machine learning, so that you get the benefits of automation, you get the effort reduction for customers that comes from digital technology and digital automation without changing the mode at which you make the market. Because commercial insurance, that placement market is largely made in documentation being exchanged between brokers and carriers and customers. Right. So what we add is a layer of automation on top of that just 10 years ago was impossible. But now with advances in machine learning and natural language understanding, we can reduce that effort for the placement market significantly while letting them continue to transact business in the mode that they're most familiar with and they're most comfortable with.
So before we go too deep on that, because I do want to go there, let's step up just one level. Where is AI? Because AI and ML are broad. I think anybody listening to these podcasts understands that, right? You could have natural language processing. You could have computer vision, which is a piece of that if it's doing OCR. There are lots of different types and categories of skills and capabilities and underlying technologies. If you look at your whole industry, the insurance space, and look at maybe other folks in the space, not your company, how much AI and ML, how much of that is prevalent in the insurance industry? And let's not worry about the laggards. In the leading folks inside your space, how much AI and ML is really being used? And generally, what kind of patterns are you seeing there?
So you'll see in the carriers, particularly, there's a lot of sophisticated use of machine learning in the core underwriting process as a supplement to the standard statistical or actuarial sciences that they use to price their risk. They'll be consuming data now from broad ranges of sources. They'll be using that data to identify patterns that are not easily noticeable by people, but are accessible to machine learning. So if you think about automation that's occurred in industry over the past century, you'll see that we've automated a lot of sort of physical effort. Right, machinery has made it possible to automate physical effort. So you can go all the way back to steam engines and things that arrived very early in the century that reduced the need for just human muscle, to more advanced computer-aided machining and milling that added precision, made it possible now not just to do things faster and with less physical effort, but also more precisely and more repeatably and consistently. This is one of the benefits of automation. What we're seeing now with machine learning, and you'll see it inside of how carriers make some decisions about how they price risk, not on an individual case-by-case basis at this point, but really in how they manage their loss ratios on specific kinds of perils, is you'll see that now they're using the machinery to augment or supplement the human ability to notice patterns and to make decisions based on those patterns. So that pattern matching and pattern recognition facility in machine learning is like a core capability, and it's showing up in underwriting, and it's showing up in how they manage their loss ratio. On the broker side, it's not as current. You're not going to see as much machine learning application in that world, partly
Okay.
because it's such a human business. Brokerage is it's a lot about making sure that they're servicing the customer well, that they understand their business fully, and it's a subtler thing versus just modeling the pure risk. That's
Right.
not to say that there isn't room for automation, and that's where we become very interesting. But it's not the sort of gross risk pattern matching that we're seeing on the carrier side. So if you think about carriers and their mission and how they operate, I think one of the things that they've invested in very successfully, and one of the things they've done very sophisticatedly, is that risk management core competency, is understanding when they look at a set of companies for which they have agreed to or bound to cover some risks, they understand how to size that, and they understand what size their reserve needs to be to make sure that there's always something left to pay the claim. Like, they do that core competency extraordinarily well, and it's where they've deployed technology best. They focused really on making sure that that core of the business is well served by technology. There is lots of opportunity now for carriers to step beyond that and to look at how they service their brokers and the end customer, particularly in the placement side where we operate, but also on the claim side where it's important for them to make sure that they're doing a great job in honoring the covenants and the policies.
So let's talk about, what you guys specifically are doing. Now, I don't know your personal background. Have you been in insurance your whole life, or how did you land here? Let's start with your sort of journey into this, and then the genesis kind of the company and the idea itself.
Sure. So I'm a software guy by trade. I'm not really a machine learning specialist. I'm a large scale enterprise systems professional. So I started my career in CRM. I worked in a small company that got bought by a really big company called Siebel Systems. I worked with Siebel for a number of years. They had, a large presence in financial services, lots of great insurance customers, lots of great banking customers. I was fortunate enough to help build vertical solutions inside of Siebel for those segments.
Nice.
Siebel got acquired by Oracle around that same time. I went to work at a small commercial insurance product management company. So this was a software product that was focused on capturing the rules and definitions that make up policies and coverages, and helping to make sure that the submission to bind process, this placement process, the underwriting portion of it is frictionless. And I discovered it was really, really hard. And I'll admit I didn't like it very much. As a systems person, you like things that are consistent, that don't have a lot of special cases, that don't have a lot of sort of flexibility and variety. And that isn't really commercial insurance products. Commercial insurance products are very flexible. They've got lots of special cases. They've got lots of, to systems people, they might look like inconsistencies. To commercial insurers, they're crucial differences and advantages that make their policies more effective and make them more flexible. So it was a really tough challenge for the technology at the time to help in a meaningful way in that environment. After about a year, I left and returned to Oracle and joined their CRM on demand group. They were building one of the very early software as a service products. Extremely proud of the team and the work we did there to build what was a really significant business line for Siebel and then for Oracle. And so I got into what were the early stages of cloud at the time. They weren't really even described as cloud. And I had a great time helping build that product, again, CRM focused. During that time, Amazon reached out to me. They were starting a development site in Toronto. I was fortunate to be one of the first hires that was hired in Toronto as a leader to help build their development team there. And that's where I got exposed to natural language processing. The customer service technology team inside of Amazon was doing some really innovative and really interesting things where they were applying machine learning to social media so that they could identify customers having problems and voicing those problems on Twitter or in Facebook. And so they were actively listening using machinery to understand that natural language and helping to trigger interactions with their customer service agents to reach out to the customers that were having a hard time by listening.
That's pretty cool.
Yeah, it's one of the most innovative and early examples. And this was really around like 2012, 2013 that they were doing this. So it was fairly early.
Yeah.
They had lots of inside of customer service tech. They had a lot of innovative examples of using natural language understanding and natural language processing to drive up their data quality, to give customers better experiences, and to make them capable of handling the scale of customer information in a really novel and interesting way. So they could notice patterns, they could respond more effectively to customers faster, and they could really deliver a customer service experience that I think we all respect and admire about Amazon. So that for me was a really informative period of my career. I learned a ton about how Amazon thinks and operates and how they approach their business and how they build technology to service it. After that, I joined IBM in the Watson Group and Cloud Computing Group. Had a great time there helping them to define their cloud offerings and build out that part of their business. And towards the end of my time there, it was a lot of travel. And I just got the opportunity to stick closer to home and join a small company in Toronto called Integrate AI. Had a great time there for a couple of years, really learned a ton about practical startup using machine learning and what it looks like to try to define the right problems for machine learning. And during my tenure there is when the opportunity at Chisel popped up. And for me, the combination of the experience early in that commercial insurance company and that commercial insurance software company, and then the time at Amazon, I got a real conviction around where natural language processing was going to be impactful for the insurance industry. Mm-hmm. Having had the early experience with the complexity and the nuance and the subtlety of how complex the product is earlier in my career, and then seeing that same kind of challenge be met with natural language understanding and natural language processing inside of Amazon, it gave me conviction that the first company that meaningfully applies this technology to the commercial insurance space is going to be impactful. It's going to make a difference to an important industry. So as much as it was hard for me as a systems person to tackle the complexity of the product, the tools and seeing the technology advance and meet that complexity, when the opportunity came up at Chisel, I couldn't say no. We're focused on that placement process, that selling of commercial insurance to make sure that a company can get the coverage it needs, and that it's properly and accurately and well reflected through the entire placement process. And to do that by reducing human effort, right? Really using the human brain glucose on the problems it needs to be used on, and not just on extracting the information from the documents and doing some of the rote processing that needs to happen.
Right. So walk me through the problem. We've got the backdrop, we've got the brokers, we've got the carriers, we've got the business that wants to, cover off some risks with their trucks and things like that. So what's the problem with the existing thing? And then what are you using? What technology, tools, and processes and approaches are you using to solve that?
Sure. So it's a lot of work to place commercial insurance. It's a lot of human effort. Okay. You start with a conversation with your broker where your broker learns about your business, right? We use the ice cream truck example again.
Sure.
Your broker's going to be taking a lot of notes. And what they're trying to do is they're trying to build what's known as a submission. It's essentially a completed application for commercial insurance, along with a bunch of background about your company and maybe some additional information that goes into how they price the risk or how they rate your policy. They're collecting all of that information and they're putting it into a package of, for lack of better words, PDF documents and emails.
Sure.
Okay. When they have that completed, they're going to take that and they're going to send it to 10 or 12 different carriers. The carriers are going to unpack that submission. They're going to have a human being read it. And then that human being has to make a decision about whether that's business they want to pass on to an underwriter or whether right away they can disqualify that business as not being in their objectives. This is a really subtle and important decision because you got to think about carriers as competitive bodies, but they also cooperate. And they don't want to take on every risk because they don't want to be overexposed in a particular kind of loss, right? It's necessary for the whole insurance system to stay resilient, for them to push the different kinds of risks around in sort of a load balancing fashion. They want to make sure that they stay exposed properly to the amount of risk in a particular geography, on a particular peril, and that they're not overexposed in that way. So they take those submissions really seriously, and they take qualifying them pretty serious. And that sort of first process, right, of clearing and registering that applicant, they want to make sure that they haven't done business with them before, or if they have done business with them before, they're connecting the entities to the priors that they've insured. They want to make sure that they understand the nature of the business. They want to make sure that they understand some key statistics about it. And they collect all that data, and they basically take it out of submission. And every carrier that looks at the submission is going to take that out. They're going to have a human being read it, and they're going to have a human being key that information into their clearance and registration systems, and maybe even further into their rating systems. But it's a manual effort to compile that information. It's then a manual effort to unpack it inside of each carrier. When the carriers have done that and they've decided to quote on the business, they'll take the systems that generate the quotes, and they will use that system to produce another document that lists the kind of insurance they're willing to offer, the limits to it, what it would cost, all the conditions around it, and they send that back to the broker. The broker then takes those documents, and they may start to key information from them into their broker management system. If they have a tool for comparing the quotes in a systematic fashion, they'll have to key all the information from all the different quotes into the carriers into that quote comparison system. And again, it's manual. It's human beings reading the paper documents, transcribing the information, just to get to the point where they can make a decision. At that point, the broker is going to go to the customer and say, I recommend this particular quote. Okay, that's just the first part of the system. That can take a couple of weeks, can take a month just to get to that point. And the nature of it is that the medium, the paper, is really flexible and really easy to do that in. It's the fastest and easiest thing for a broker to work with. It's the fastest and easiest thing for the carrier to consume. And on the submission side, the carriers don't have a strong hand they can play about the format of the submission. They really need to meet the brokers on the broker's terms with respect to what they'll present. And through the whole thing, the broker has to stay independent and trustworthy to both sides, right? They can't get too tightly digitally tied to a particular carrier. If they do, then the other carriers will always look slightly side-eyed at the business from that broker. Additionally, so will customers. So there's an incentive for them to stay as neutral and independent as they can, and working in the paper helps them do that. What you should hear through all of that is just to get to a quote, there's a lot of human effort that's involved.
Right.
So for us, our first entry, and the most important thing for us to do and where we're focused today, is on reducing that effort. Okay. There's a little bit of a machine learning application playbook that I was fortunate enough to witness at Amazon, and that I've seen repeated from just industry observation, where the entry point for these solutions is always centrally about reducing your customer's effort. It's always first about automating what they do as well as you can.
Right.
Okay. For us, we use natural language processing and supervised learning to meaningfully take the key terms, the material terms, out of the paperwork, make it accessible automatically or through an API call to the clearance and registration systems. So that effort that they have on the carrier side of having to read the submissions, extract the information, and rekey it, we reduce that significantly. We still have human supervision even on the customer part to help us in cases where we have low confidence on classification. But what we're really doing is we're reducing that effort for that carrier to take those submissions in more quickly. They're no longer blocked on the availability of an individual to crack open the email, look at all the information, and key it into the system. It's something that can happen at electric speed. As soon as that submission is sent, it can be broken down, classified, and made accessible to the clearance and registration systems. On the other side, when the quotes come back to the brokerages, we can do the same thing with the quote documents. The paper that's coming from different carriers, we can take that, we can extract the material terms, we can make it possible with the tool that we built on top of our core extraction to compare those quotes.
I suppose in a perfect world, as you kind of started the conversation, like it would be ideal if you just said, look, everybody, here's a set of standards. Here's how we can write even these flexible policies. Everybody's going to use the same APIs. You don't have to worry about one group getting too close to the other because everybody's going to be on the same standards. We have an internet, right? We know this works. We have in enterprise networking. We know that that is possible, and that's how much of the web service and web companies are run. Amazon being another great example of that. why can't you get there? Like, why not? Why? Because what you're doing is you're saying, well, we're still going to put everything on dead trees and PDFs, but we can't quite get there to this perfect, beautiful world of everybody just exchanging things. EDI has been around, 40 years?
It has to.
What's the newest version of EDI or web services? Why can't you get there? And why is this the best first step?
Well, and I think they do get there. I think we get there as an industry, but I think it's through a lot of different transformations. The thing to remember about EDI and wire level protocols, even things like settlement and placement markets like stocks and others, where the offering is very commodity and it's not very complex. So, whether you're thinking about how we connect networks together with TCP, the underlying datagrams and the underlying standards that are in place are fixed. And there's no real competitive advantage. We found out over, a 20-year adoption cycle that there's no real competitive advantage to alternatives like IPX or some of the stuff that came from Novell. Like if you go into the history of that standards adoption, it takes time and it really takes a lack of competitive dynamic. The other thing that has to happen is the counterparties have to not require arm's length sort of requirements. So this placement market is in commercial insurance is a little bit different than something like integrating a network, or even something like EDI, where Walmart can connect to Procter and Gamble and say, this is how much toilet paper and how much paper towel we want to order from your division this month. That stuff there's no potential conflict with respect to the EDI gateway between that customer supplier relationship. With a placement market like commercial insurance, this broker is playing this role where they're extremely trusted. The carriers must trust them to adequately and accurately represent the risks that they're pricing. They don't want to do business with a broker that misrepresents that. Sure. On the other side, the customer must trust them to adequately and accurately represent the coverage they need and the value of the coverage they're getting back from carriers. ISO, Insurance Services Organization, and Accord, these are examples where they've tried to get an electronic interchange format and standardized forms in place. And for a lot of coverages and a lot of lines of business, there are those options. But for most of the carriers, they still see the opportunity to be innovative and the opportunity for them to offer a really well-tailored experience as being hindered by that kind of commodity or
I could see that
kind of standardization.
Structure is the opposite of flexibility, right?
That's right. So they struggle a little bit with that. And on the broker side, they want to stay independent. And they ultimately have a strong relationship with their customers that's based on the work they put into those relationships. They don't necessarily want to be disintermediated by standardization to the point where the nature of the product is more like, if you think about how you buy personal lines today, you go to a Sonnet or you go to the equivalent in the United States, these portals that allow you to price your car insurance, where you just answer the same 20 questions. Right. And then you get 17 quotes from different carriers. That experience is possible largely because auto insurance for personal lines is very commodity. It's very fungible, very like for like, very tightly defined, sometimes by regulation. Sure. So the commercial space is a lot wilder, a lot more complex. There's a lot more competition and vibrancy. There's even cases where brokerages will work with carriers to assemble sets of coverages together and to build, policy sets that are offered as a particular kind of product managed by the brokerage. So there's a lot of opportunity for product innovation. There's a lot of opportunity for rapid iteration and improvement of coverages. It all depends on it being done in language. The way they're used to doing it and the way that works best and fastest and has been proven over the years for these things that are flexible is to work directly in the contracts. There are other placement markets that are like that are that complex. Commercial insurance is just one that has really great scale and is really interesting for us as practitioners of ML to focus on a real world problem we can solve, right? Taking the friction out of this placement market, accelerating the placement market is a very unique opportunity over the long term. In the immediate term, just making it faster and easier for a carrier to take in a submission and produce a quote, making it faster and easier for a brokerage to ensure the quality of the documents that they are that they're provisioning for their customers. These are things that we can apply ML to directly today as an industry facility that will be great effort reducers for the future.
Which is huge, because you're basically saying to the industry, look, this is complex. We aren't going to get to standards anytime soon. This is a lot of unique special snowflakes, and essentially custom policies are the rule, not the exception. So in that world, it sounds like your value proposition is everybody keep doing what you're doing. We're just going to speed this whole process up. We're going to go from 4 weeks to whatever, days or minutes or something like that. So what does that look like? So I've got my trucks in my ice cream business. I go to my broker. I give them all the information. If I've captured this correctly from this conversation, they put all that into a submission. They send that to the carrier or multiple carriers, right?
Multiple carriers. Yeah.
Multiple carriers, and then those carriers will decide whether or not they want to bid for the business, et cetera. And then that may ultimately end up with an underwriter who actually underwrites the policy. So that whole chain could take, I'm guessing, weeks to months.
That's right. So depending on how
and a lot of human error and a lot of data entry into multiple systems along that track.
Right. And so when you think about that overall time, there's just the availability of people to do the work.
Yep.
Right. If you want something done really, really quickly, it's just what's in their queue and are they available? That's something that you can scale with automation a lot faster. You just add the capacity as fungible units. So you reduce the availability problem. There's a consistency and quality challenge. Like, we will, as an ML powered solution, be as good as the average human on their best day, because we're trained by average humans, right? So we take a lot of training data from a broad set of people, and we use that training data in a supervised fashion. So the way to think about the precision and accuracy of the solution is going to be the average human on their best day. It's not going to be radically better than that, but it will be consistently their best day, and it will be consistently available. And then it will do what it does at electric speed. It won't do it at human speed. Right. So you just get the overall throughput and acceleration plus the effort reduction on these rote tasks. And inside of the placement process, I think we audited about 14 different places where these rote tasks add friction and slow things down. And by having the facility in place to automate those, we just speed up the overall placement process. There's precedent for this. This is a pattern that I believe exists very firmly in all of the sort of internet giants and companies we pay attention to as being most innovative right now. Their applications of machine learning, whether it's like an Amazon or a Netflix or a Google, their applications of machine learning are always first about reducing human effort. It's always about the automation that makes life a little bit easier for people accomplishing a task. If you think about Netflix, just keeping yourself entertained, the ability to have access to that catalog and to on demand on your schedule watch whatever particular piece of content you want to watch with them, that is a reduction in effort for you that they've evolved from when you would order CDs online for them. Right? It used to be you would go to their website or you would fill out a form, and then they would mail you the set of CDs in your queue, and you would work your way through them and mail them back. They actually added then the streaming offering on top of that. It was just a way to accelerate all that. The reduction in effort that occurred there, right, of eliminating the CD so you could get it immediately, that reduction in effort was significant. And the popularity from that point forward was explosive and really important. And then they added in recommendations. They added in more compelling and complete search. So finding the content you were interested in was a lot easier. That's another example just where they've applied that machine learning technology to learn how to make recommendations to you that make it easier for you to be entertained. Where all of this, of course, ends up is when you think about what they've done by reducing the effort. And this is something that we aspire to, I think, in the long term at Chisel, but sort of starts with that effort reduction. What they've done by reducing that effort is they've established a channel with you that they can experiment in. And what they've done with the data that they collect, the telemetry and the information they get from your usage of their system, is they've gotten enough intelligence and insight now where they can take really compelling risks in the content they produce. and they can outperform, the previous status quo with respect to how they meet the market with content. Like the best television programming that's happening now is happening from these streaming services where they've learned so much about the human capacity for being entertained and what is interesting to people and how they like to be entertained. They've learned enough about that they've turned it into the actual content production side. And they've really changed the entire entertainment industry as a result. Like just starting with, let's reduce people's effort in consuming content, learn as much as we can from having that channel with them, that ability to understand and instrument what they're doing, and then turn it into unique and different and differentiated offering. It's really been an interesting thing to watch. And that pattern, you can think about how that pattern repeats with Google across their products, the Android phones, search.
Right.
The Maps product is a great example of that. You can see how Amazon has leveraged that with respect to what they do with selection and availability of product, and then learning about
creation of product, essentially all Amazon basics, right? I mean, they saw what people wanted and they said, we can make that and we can make it at a really good, even better profit margin. Let's put our own in that particular product category.
And that's a like that example with Amazon Basics is compelling and interesting. The entire Prime program was informed by user purchasing behavior, which customers would pay for accelerated shipping and how much more they would buy if you allowed them to subscribe to accelerated shipping. And then, you see how they've expanded everything they've learned about people all the way through Prime Video, Prime Music. And now ultimately that channel that they've established, you now can talk to Amazon, ask it about the weather, ask it what's happening in the news, and they're learning about your behaviors and your preferences from that, and using it then to make sure that they deliver more interesting, more differentiated product. In the insurance placement world, with the effort reduction that we put in place at Chisel inside of this overall placement conversation between brokers and carriers, we have the opportunity to reduce their efforts significantly. And that's where it starts. That's the first and most important thing. The grandest vision for us, of course, is to be a facility for the industry where we've significantly reduced their efforts. We've accelerated the placement process. And as a result of accelerating it and making more data available more transparently, we're giving them the ability to differentiate themselves as carriers. We're giving them the ability to differentiate themselves as brokers.
Absolutely.
It starts really simply with making it easier to submit an application, making it easier to process that application, making it easier to select a quote. But it becomes and evolves into routing the right kinds of submissions to the carriers that have expressed an indication that that's the loss ratios that they want to fit into. That's the business they want to fit against.
If that's where you start, that stuff's pretty well understood. The NLP stuff, the OCR stuff, that's been around. Obviously, the deep learning is moving that a few steps up. What's next? Where does that go in terms of like interesting AI and ML challenges beyond that?
Well, it's interesting. I think you're right in saying that it's well understood, and in the academic sense, and in the in the Kaggle data sets or in the example sets, it's well understood. In the practical engineering side of it, there's a gap that needs to be overcome, and we're focused pretty tightly on making that core capability work well, just to reduce effort. Like really, our mission immediately and for the foreseeable future is really going to be to reduce effort in that overall placement process by making sure that our extraction is world-class, that we're getting the right labeled information out of these documents consistently, that our APIs are easy to consume, that the workflow applications that we build on top are beautiful and fast and functional for customers. We really care about making sure that the brokers that work with our product have a great experience, that the carriers, the underwriter support staff, and the people that work in the carriers, that they have a great experience. And ultimately, our measure of success on that is going to be that a customer buys insurance more quickly and more easily because our tools are in place in that ecosystem. That's really where we're exclusively focused. The grander vision beyond that of what accelerating placement means for the industry is going to be something we really want to participate in, something that we really want to do a great job in, but it's going to be the innovative carriers and brokers that really lead on that, because we're only one part of that. We're just the enabling technology that helps that acceleration happen. And we are going to, enhance and grow that enabling technology as best we can. But the decisions for carriers to offer new products that are more innovative because the submission process is easier, the decision by the brokers to understand customer needs more deeply because they have great lookalike data that comes out of using our system. This is stuff that the industry as a whole is going to lead on. Mm-hmm. What we are is a part of that overall. So it's a moment for commercial insurance where this introduction of machine learning to help reduce that effort is going to give them the opportunity then to think about what does it look like to transform their entire business because of this acceleration.
One of the things that I've been having a lot of conversations about is tech stacks, platforms, things like that. So I'm going to dive a little bit into that. And obviously you've got your enterprise systems architect, hat you could put on. Build, buy, borrow, open source, DIY versus buying platforms. Clearly you're building something with proprietary systems, proprietary models, all of that. I understand that. Just, do you have any thoughts in terms of overall architecture thinking, in terms of, other folks maybe doing what you're doing, building something in a particular industry, they're building an AI product for a particular customer and use case. They're facing that. Do we build, do we buy, do we borrow, do we open source, et cetera? How do you think about that? In terms of your infrastructure?
That's a great question. Thank you for it. You buy or use commodity for commodity capabilities. So if you need named entity recognition, then there are great services from Amazon, there are great services from others, and there are open source packages that give you named entity recognition. Yeah. Again, if you need document OCR and document structure understanding, there are great services from Amazon. There are great open source packages. The thing that I would say is that using the cloud platform providers for these commodity capabilities just makes sense. That stuff is going to get better over time from people using it. It's going to be well resourced and well funded so that it grows and improves, and it's going to get cheaper over time. It's not, it's going to get less expensive with adoption and usage, because that is the nature of those large platforms, is to drive commodity. But that's not even 70% of the challenge. When it comes to something like what we're tackling for commercial insurance, those basic commodity capabilities, they're not going to solve, they'll solve 30% of the overall search space you have to solve to solve the problem. Right. So on top of that, you have to think about investing in the things that are going to differentiate you, investing in the pieces that are going to be materially important to the very specific problem you're solving. That's why having a really tightly defined vertical market with a really tightly defined set of processes that you're addressing is super, super important. Because if you're looking at this from a more broad or general capability standpoint, it's hard to see the specific problems you're going to need to solve. And it's hard to define the specific tests you're going to need to pass to succeed. So those general capabilities, they're well served by the general services. But again, you'll find when you practically apply them, that's like a third of the problem. And then the remaining 2/3 of the problem, you really do have to invent your way through. And, it might be that you want to stack a set of services together, or take in ensemble a bunch of these different pieces. But knowing what pieces apply and knowing what pieces to want to ensemble together, this is the hard part. So I would say you buy the commodity capabilities, you buy your OCR, you buy your named entity recognition and your basic language models. And then you do need to invest in labeling. Any of these specific problems, there's not enough in unsupervised, semi-supervised, or reinforcement progress there for you not to need to have human experts identify examples for the machine to learn from. So we're
Right.
still at a place where supervised learning is important.
Mhm.
Semi-supervised techniques are getting better. Reinforcement learning is a really interesting area of research, but it's not one that I think is going to be commercially relevant immediately. So you do have to invest in making sure that you've got the right data and work with your customers to source and compile that right data, and then make sure that you spend the effort to get it labeled well. And then from
Right.
there, the engineering starts. The classifiers you need to invent, you need to make sure that you understand how to invent those. And it's important, I think, particularly for early stage companies like ours, to constantly validate. So there's not a go away to a mountaintop for 5 years and come back with the problem solved. It's very much an iterative process. It's very much a show your work and be transparent about where you're succeeding and failing, and allow your customer to get value on where you're succeeding, and then give them the mechanism to give you more training data, to give you more feedback, and give you more learning through your channel as part of the process. I mean, the level 4 autonomous car isn't quite here yet, but there's a lot of level 3 and level 2 Teslas on the road that are learning everything they need to learn to be level 4. And that for us is where, when we think about our focus immediately, is we want to get value to customers quickly. We want to make sure that they can give us a lot of great feedback to improve the classification, improve the system as it goes, and still get their job done effectively. And while they're doing their job, we want to make sure we're reducing their effort. We want to make sure that it's a joy and a value to them to use the tool, and not that we're in their way, slowing them down. So, I think, if you think about the stacks, you pick your cloud. They have a complement of all of the major providers, IBM, Microsoft, Google, of course, Amazon. They have a stack that comes with them. They differentiate themselves on different axes with respect to the strengths of their ML services. But you should look at that catalog and make sure you're getting the value from the commodity services that you can get. Because if you're an early stage like us and you're focused on what you can do for your customer, every minute you spend on a problem someone else has solved is a minute you're not spending on a problem only you can solve. So you got to be careful about that. Yeah, there's so many million smart speakers deployed right now. Like, if what you're trying to do is human voice recognition, the scale of services that are available from Microsoft, Google, and Amazon on being able to understand conversational speech, they've made an investment there that you're going to benefit from. It's not one that you're going to displace. So you want to make sure you embrace that.
All right. Well, I think we're just about at the end, but I did want to ask you one bonus question here for a lot of folks. We've had this conversation on a lot of the podcasts. What's your advice for folks who are getting into this industry, not necessarily the insurance, rebuilding the insurance industry with AI ML, but just generally AI and ML, who are coming into their careers? You and I both had longer careers in this space, AI or otherwise. Any thoughts, any guidance for folks who are kind of just entering the space now?
Yeah, I think that where you go for your experience counts. And the first part of your career is really focused on bending the knee of the curve of your growth. So there's lots of roles you can take where the compensation might be super attractive and the work might be really directly what you know how to do. And the value that you get in terms of learning and experience might be diminished. That will start you in a higher place, but it won't grow you much beyond that. So you got to think really about the breadth of experience that you're going to have early in your career. This is general career advice. It's not specific to AI and ML, but the AI and ML sort of perspective on it is to think about the places where those problems exist that you are going to get a broad exposure to. So, the work that insurance carriers and brokers are going to do in the future is a place where there's a richness of problems to overcome in machine learning. it's a great opportunity to look at those larger institutions that are being innovative, that are focusing on that.
Right.
There's also a great opportunity to look at the small companies. So if you look at somebody like us, and we're hiring aggressively right now, and we want to make sure that we're adding some of the most talented and smartest people in the industry, we're not going to compete on a one-year compensation package with the likes of Google. It's just not the right exposure for us, and it's not the right sort of payoff calculus for us. But where we will compete is that the breadth of problem that you'll tackle, the kind of experience you'll get in an early stage, the amount of influence you can have over the definition of the product, the amount of unique engineering challenge that the specific niche we focus in presents. That's something where the answers are not easily searchable on a search engine. They're not easily found in a textbook. They take invention, they take perseverance, and they take an effort in the face of uncertainty that is a unique opportunity for people to learn. You want to find those experiences. You want to find the experiences that really test your mettle, test your perseverance, that aren't obvious that they're going to be a clear win from the outset, where you're not sure you know how to do it yet. You want to embrace those moments early in your career, because the lessons that you learn from those will really bend the knee of the curve of your growth. If you can learn to tackle a problem that people aren't sure can be solved, and you can learn to systematically tackle it and solve it, taking that experience with you to other places is supremely valuable. So, I think about, grads that are coming out now from statistics programs, that are coming out from machine learning programs, and computer science programs, and they're trying to think about where do they really want to put their time and energy and talent. You want to look at small companies doing very hard, specific things like us. Not just us, but companies like that. And then you want to look at the large, really successful operators that are addressing hard problems in their business and that are willing to take risks to address those hard problems. So those would be the sort of the two ends that I would suggest folks focus on. And if you're really talented, we're hiring, and we'd be excited to talk to you.
Awesome. I was going to say, you should throw your pitch in there. So we'll put, obviously there'll be a link in the show notes for that. So it's chisel.ai, right, as your URL. So I'm sure there's a careers page on there. Colin, thank you so much for making time for this conversation. I really appreciated it. And also the lead up to this call. Thank you very, very much.
Likewise, Troy. Thank you for taking the time with me today. And thank you for helping me out with participating on a great podcast like this.
Yeah, I really appreciate you being here today. So with that brings us to the end of the Productive AI podcast for the day with Colin Toal, CTO at Chisel.ai. I hope you enjoyed the episode. Please check out the show notes. We'll put links in there for a couple of things that we discussed on the call today. Thank you so much for joining us, and we'll see you on the next episode.